Schaeffler India has posted a good set of earnings this quarter. The strong domestic sales volume have aided the top-line growth, but margins have been offset by higher steel prices. Dharmesh Arora, CEO of Schaeffler India, joins us on the phone line now. Mr. Dharmesh, good afternoon. Thank you so much for joining us. First up, if you could break down the number for us. The export sales this quarter were not very impressive, but the domestic sales is what aided the top line. Is that trend expected to continue going forward?
Yeah, I think I would say that we're satisfied with the numbers that we have been able to achieve in the quarter. We've been able to maintain the growth momentum that we have picked up in this year, and the results are in line with the quarter one sales growth that we had achieved. For the numbers that we announced for the quarter 2 2018, growth was 4.5% compared to the same quarter of 2017. Which is a pretty good growth. And if you were to look at various sectors, industrial, returned very good numbers of about 14.5%. Automotive, of course, was growing much faster than that, almost 36% growth. And we intentionally tried to see as to how we could satisfy the customers. And in a way, our export, which is a smaller percentage of overall sales, did slow down, but that was more of an intentional call, make sure that we were able to support the domestic customers and OE customers completely.
Right, Mr. Arora, we'll just come to you in a bit, sir. Numbers coming in for Shree Cement, and actually it's pretty much along expected lines. They have undertaken some capacity expansion, because of which we're seeing that bit of 3,000 crore plus number on their top line. But the operational performance not looking very impressive. So compared to the poll as well, the EBITDA has come down lower to about 574 odd crores. The profit has come in at 279 at 18.7. Margins are actually way below what our own poll had thrown up, which was working with a number of about 22%. So it was expected to be a weak performance this quarter, but I guess even on those expectations, it's a tad bit disappointing. So a couple of factors at play there, higher cost, lower realizations, etc. So all of that not boding well for Shree Cement at the moment. But let's get back to talking about Schaeffler India. We have Mr. Dharmesh Arora, the CEO, on the line with us. Mr. Arora, what's the trend that you see in terms of volumes through the year, and how are you expecting now steel prices to trend? I mean, this time around we've seen some impact on your margins. From here, where do you expect prices to move?
Yeah, I think the order book remains pretty robust, so we are pretty happy with the way we see the business going for the remaining of the year. We are also in the process of completing a merger of the three entities. So we did announce on the performance basis the results, which were also in line with our growth that we have achieved so far. So on a consolidated performance basis, the business grew 14.8%, and the margins also maintaining in line with the results from the last year. Now, as far as the bottom line or the EBT numbers were concerned, yes, we have seen certain rise in commodity prices beginning of late last year, and then of course building up in this year. A lot of these costs have built into our material costs already, but the pricing action and particularly the mitigation actions have not completely been realized yet. So as we go on into the marketplace and work on realizing the prices, we hope that the next two quarters, particularly quarter 3 and quarter 4, for the calendar year and financial year for us, we will be able to better realize our prices and be able to improve upon the numbers that we have declared. But for the rest of the year, we do expect the growth momentum to continue, and we do expect that we should be able to do better in terms of the price realization from the real cost pressure that we are seeing.
Okay, Mr. Arora, you expect the growth momentum to continue. Thank you so much for joining us with that perspective.